What if the next big leap for XRP didn't come from Ripple itself, but from a brand new company built by Ripple's own leaders and investors? That's exactly what just happened with Evernorth Holdings. It's not a Ripple subsidiary, but it was designed to do something no one has ever done before: turn XRP into a true institutional asset class. Here's why that matters, and why people who understand liquidity are calling this one of the most important moments for XRP since the ledger first went live. Back in October 2025, a press release hit the wire announcing Evernorth Holdings. The company plans to merge with Armada Acquisition Corp II, a Nasdaq-listed SPAC, and when that closes in early 2026, it will trade under the ticker XRPN. The numbers in that deal are huge: over $1 billion in total capital, $200 million in cash from SBI Holdings, $300 million worth of XRP contributed directly by Ripple, plus investments from Pantera Capital, Kraken, GSR Markets, RippleWorks, and Ripple co-founder Chris Larsen. Citigroup and Davis Polk helped structure the deal. So for the first time ever, there will be a public company built entirely around XRP. Its balance sheet, its revenue model, even its mission are tied to growing the XRP ecosystem and putting that asset to work. Running the company is Asheesh Birla, the same guy who used to run Ripple's cross-border payments business and helped launch on-demand liquidity with MoneyGram and Bitso. He left Ripple's board to become Evernorth's CEO. Around him is a team that blends Wall Street and crypto experience: Matthew Freimeyer from Bank of America as CFO, Meg Nakamura from Apto Payments as COO, Jessica Jonas from Gemini as Chief Legal Officer, and Sagar Shah, another Ripple veteran, as Chief Business Officer. Brad Garlinghouse, David Schwartz, and Stuart Alderodi are all serving as advisors. So while Evernorth is independent, it's clearly moving in rhythm with Ripple's broader plan. Evernorth describes itself as a digital asset treasury. In plain terms, that means it buys XRP, holds it as a reserve asset, and then puts it to work in the market instead of letting it sit still. It can lend XRP to market makers, provide liquidity for institutional payments, or use it inside DeFi and real-world asset programs to earn yield. It also funds developers and validators on the XRP ledger and participates in projects that use Ripple's new stablecoin RLUSD for settlement. The goal is to increase the number of XRP per share over time by actually deploying the asset rather than just hoping it appreciates. Think of it like a mix between a corporate treasury and an investment fund, only fully regulated and soon to be listed on Nasdaq. You might be wondering why this is happening now. Ripple has spent the past few years building the infrastructure: on-demand liquidity for cross-border payments, RLUSD for stablecoin transactions, Medico and standard custody for regulated asset storage, and Ripple Prime, formerly Hidden Road, as the institutional liquidity bridge. What was missing was a regulated capital entity that could hold and use XRP inside traditional finance. Evernorth is that missing piece. Instead of an ETF that simply tracks price, Evernorth gives Wall Street a familiar vehicle, a public stock. Fund managers can buy shares in XRPN and get exposure to XRP without dealing with crypto custody. It also means Evernorth can use normal financial tools, issue bonds, borrow against its holdings, and operate like any other treasury-focused company. It connects the blockchain side of Ripple's world with the deepest liquidity pools in traditional finance. Brad Garlinghouse summed it up by saying Evernorth is deeply aligned with Ripple's mission to expand use cases, participation, and confidence in the XRP ecosystem. Ripple is an investor and advisor, not the owner, but the partnership works both ways. Ripple builds the infrastructure. Evernorth uses it to generate activity and liquidity. As Evernorth lends and invests its XRP, it naturally deepens order books and improves market depth, which makes every Ripple-powered transaction more efficient. Liquidity is what keeps any financial system alive, and right now most XRP liquidity lives on exchanges or inside payment corridors. Evernorth adds a new dimension: balance sheet liquidity. When it lends XRP to institutions or uses it as collateral for tokenized asset programs, it increases utility without increasing supply. That's scarcity and circulation at the same time, and that's healthy for long-term price discovery. It also reframes how Wall Street sees XRP. Instead of a crypto token, it becomes an asset tied to a public company with audited financials and oversight. That mental shift is massive. People naturally compare this to MicroStrategy's Bitcoin strategy, but the difference couldn't be clearer. MicroStrategy borrowed billions just to buy Bitcoin and park it, waiting for the price to rise. Evernorth is built to use XRP, to lend it, to provide liquidity, to fund growth. It's active capital, not a static hoard. The model looks a lot more like a yield-generating reserve fund than a speculative bet. Zooming out, you can see where it fits inside the broader Ripple stack. RippleNet and on-demand liquidity handle payments. Ripple Prime sources liquidity. Metaco and standard custody secure assets. The XRP ledger settles and records every transaction. Now Evernorth sits on top of all that as the capital layer connecting those on-chain activities to global markets and DeFi yield. Together, it's a closed-loop system where value moves, settles, and earns all within one network. Evernorth is also launching into a regulatory climate that finally makes sense for XRP. U.S. courts have ruled that secondary sales of XRP are not securities. Ripple holds more than 50 state money transmitter licenses and has applied for a national trust bank charter and a Federal Reserve master account. That clarity gives both Ripple and Evernorth confidence to interact with banks, funds, and governments without the gray zones that slowed adoption years ago. So what does this look like in practice? Imagine a corporate treasurer using G Treasury who needs instant foreign exchange liquidity. Ripple Payments kicks off the transaction, Ripple Prime finds the liquidity, and Evernorth lends XRP into that corridor. The payment completes in seconds, Evernorth earns yield on its capital, and the company sees faster settlement than it ever could through SWIFT. Or picture a DeFi platform in Dubai offering stablecoin loans. Evernorth supplies XRP as collateral, earning interest while turning XRP into a reserve asset. Or a tokenized bond fund using Ripple's RLUSD for settlement, with Evernorth acting as a market maker to keep spreads tight. Each of those cases uses XRP because it works, not because someone is speculating on price. For institutional investors, Evernorth solves several problems at once. It gives them a regulated way to get exposure through stock ownership. It generates yield rather than relying purely on appreciation. And it's aligned with one of the most established names in enterprise blockchain. In short, it's an on-ramp for traditional capital into the XRP world. No one can predict price, but the structure here changes the fundamentals of demand. As Evernorth builds its reserves and uses XRP for collateral, the available supply on the open market shrinks while the number of active use cases grows. That kind of demand-driven tightening is what often creates long-term upward pressure, not hype cycles. By early 2026, when XRPN begins trading, Ripple's own trust bank charter and the RLUSD rollout could also be live. That would give institutions a full regulated pathway to settle, custody, and deploy assets using Ripple's technology. For the first time, XRP liquidity, stablecoin liquidity, and institutional capital could circulate in one continuous loop. It's not about hype, it's about architecture, and that architecture didn't exist before. Evernorth's business model is designed like a flywheel. It earns returns from lending and liquidity, uses those profits to buy more XRP, and the larger its holdings grow, the more yield it can generate. It's self-reinforcing, a system that benefits both Evernorth's investors and the XRP ecosystem itself. Ripple's network benefits indirectly too, because that liquidity makes every transaction on Ripple Payments and every tokenized asset transfer on the ledger faster and cheaper. Each piece keeps the next moving. If you want a real-world analogy, think about how major currencies maintain deep, stable markets. Behind every one of them are institutions that hold reserves, make markets, and provide credit. Evernorth is bringing that same role to digital assets focused entirely on XRP. Ripple built the highway. Evernorth is the fueling station and the pit crew keeping traffic moving around the clock. That's the difference between a token that trades on exchanges and an asset that underpins a financial network. Now connected to everything Ripple has been building. Ripple Prime is the brokerage bridge, G Treasury connecting over 13,000 connected banks, Finastra and Thunes routing bank payments, standard custody and Metaco providing secure storage, the Rail acquisition linking instant payment systems, and RLUSD tying fiat liquidity directly into the ledger. Evernorth sits above all of them as the capital markets layer. It's the final link that turns Ripple's tech stack into a complete financial ecosystem, stretching from banks and corporates all the way to DeFi protocols and tokenized real-world assets. For years, XRP was seen mainly as a payments token. Evernorth changes that story. It turns XRP into a reserve asset that earns yield and anchors institutional liquidity. That's a narrative Wall Street gets instantly. They might not follow every corridor Ripple has opened in Asia or Latin America, but they absolutely understand a Nasdaq-listed company with $1 billion treasury deploying that capital strategically. In its public filings, Evernorth describes its mission as a long-term catalyst for the adoption and institutionalization of the XRP ledger. That's regulator language, not crypto marketing talk. It signals that XRP is crossing from the edges of fintech into mainstream financial infrastructure. Every validator it runs, every lending deal, every liquidity pool adds one more layer of legitimacy. And that's why this is so exciting. It's not about short-term speculation. It's about building a system that lasts. Evernorth gives XRP something almost no other digital asset has, a presence inside public markets backed by institutional investors and governed under U.S. law. It validates the entire decade Ripple spent focusing on real utility instead of hype. It shows that XRP's liquidity, clarity, and stability are finally being recognized by global finance. Once XRPN is trading, we'll probably see new financial products built around it, structured notes, ETFs of Evernorth stock, maybe even tokenized versions on XRPL. Ripple's RLUSD stablecoin will glue all those layers together, allowing money to move between RippleNet, Ripple Prime, and Evernorth's treasury strategies like water through connected pipes. When that happens, the boundary between crypto and traditional finance all but disappears. XRP stops competing with other coins and starts competing with SWIFT, Fedwire, and the Eurodollar system itself. So here's the simple takeaway. Evernorth isn't Ripple. It's an independent company built by Ripple's former executives and funded by Ripple and its closest partners. But it mirrors Ripple's mission from the capital side of the equation. Its purpose is to make XRP a professional-grade asset, deepen liquidity, and normalize XRP's role inside traditional finance. If Ripple built the network, Evernorth built the balance sheet. Together they complete the loop, banks, corporations, and DeFi all operating on one interoperable system powered by XRP. This is not another headline, it's the moment XRP officially entered the institutional era. This channel is for educational and entertainment purposes only and is not financial advice. Always do your own research and keep the discussion respectful. If you enjoyed the video, please like, subscribe, leave a comment, or share it with a friend.